Hello and welcome to Coin Monitor. This is Manoj Dara. Our topic for the day is Bitcoin outperforms stocks during the market sell-off. But here are the headlines. Market rattle as tariff war heats up, crypto joins the slide. Bitcoin has been calmer than Wall Street. Yes, you heard it right. Bitcoin falls less than equities amid the market turmoil. But before that, do like, share and subscribe to our channel and let's get started. Donald Trump had announced plans for steep tariffs on imports from the major US trading partners, including the European Union and China. In response, both have rolled out retaliatory measures, escalating fears of a full-blown trade war. The fallout has been swift. The global markets took a hit, with S&P 500 and the Nasdaq 100 posting their sharpest losses since the March 2020. But the crypto markets weren't spared. Nonetheless, Bitcoin has been calmer than the Wall Street. Yes, you heard it right. Unlike the major US stocks, which are feeling the heat from the newly announced tariffs, Bitcoin hasn't taken a major hit. That's because digital assets like Bitcoin aren't directly affected by the tariffs, and they are currently supported by the moderate leverage levels and the relatively crypto-friendly US regulations. Bitcoin's recent mood swings, also known as the realized volatility, were about 44. And meanwhile, the S&P 500, the big US companies, was more jittery at 47, and the tech-heavy Nasdaq 100 was even more restless at 51. Let's understand the Bitcoin performance versus the other asset class. So between April 1st and April 9th, 2025, Bitcoin has declined by around 10%, holding up better than the major equity benchmarks during a volatile stretch of global markets. In comparison, the S&P 500 dropped by roughly 12%, sliding from 5,633 to 4,954, and was the sharpest weekly losses since 2020. Meanwhile, gold, the traditionally viewed as a safe haven, saw only a modest dip of 2%, with prices easing from $3,120 to $3,057 per ounce. So in short, despite Bitcoin's drop in relative strength compared to the equities, has stood out, especially as the traditional assets respond to the rising geopolitical risk and the trade tensions between the US and the China. You must be wondering why the Bitcoin didn't fall much versus the US indices. So Bitcoin has performed well in relation to the equity markets, in part due to the less leverage in BTC going into the Liberation Day, after having experienced much fierce sell-offs over the past months. As the world's two largest economies enter a strong tariff war, massive uncertainty has crippled the global markets. Thus, institutional selling for the Bitcoin and other asset classes has also resumed, with the BlackRock iShares BTC Trust offloading 3,290 BTCs yesterday, the third largest Bitcoin ETF outflow since inception. The net outflows across the US Bitcoin ETFs yesterday were seen at around $326 million. Going forward, the markets are awaiting the minutes of the Federal Reserve's policy meet later in the day, as well as the US CPI index on Thursday. If the global tariff tension escalates or economic data disappoints, the selling pressure will likely continue throughout the week. That's what the analysts have said. It is also a big week for the bank first quarter earnings, with JP Morgan Chase, Wells Fargo Bank, Bank of New York Mellon, Morgan Stanley and the BlackRock slated to report its quarterly earnings. That's all there is in today's Coin Monitor. This is Manoj Dara signing off. Keep watching DogeCoin TV for more such interesting updates and analysis from the crypto world. Until then, thank you.